Starter. Tesla makes waves by building novel products for a sustainable economy, starting with electric cars. As a mark of success, the dynamo has single-handedly created a mass market for clean vehicles. Since its debut in 2003, the pioneer has gradually branched out into adjunct markets and turned into a conglomerate of high-tech ventures. The product lines on hand run the gamut from self-driving cars, solar cells, and potent batteries to insurance plans, neural supercomputers, and humanoid robots. To be sure, Tesla is a single company from a formal stance. Even so, the wunderkind in practice bears a constellation of startups in motley sectors of the economy. For this reason, a stake in Tesla reflects a diversified portfolio of technologies and applications. Breadth of products. The products in the Tesla family include tangible goods as well as virtual wares. A representative sample of current and upcoming products is as follows. Electric cars. Tesla rules the roost in the field of electric cars. From a different slant, its new age vehicles are far safer as well as vastly more reliable than traditional buggies made by old-line carmakers. Dynamic insurance. The low cost of auto insurance stems from precise data on individual customers, including real-time records of driving activity. By contrast, the old-school firms in the market rely on the blunt statistics of millions of clients in the aggregate. Robotic transports. Self-driving machines such as taxis or trucks can convey people and goods at less cost and greater convenience compared to the demands of owning and operating private vehicles. Solar roofs and household batteries. Solar panels enable private homes to generate their own electricity and store the excess in compact batteries, thus slashing their energy bills as well as affording protection from brownouts and blackouts in external grids. Decentralized utilities. A private household or singular business can produce electricity then sell the circuit to a public utility, or buy juice, through the communal grid in order to meet any shortfall. Battery farms. A public utility can save tens of millions of dollars a year by using solar cells to produce electricity during daylight hours, then storing the surplus in an orchard of battery packs for later use. Neural supercomputers. The first generation of the Dojo supercomputer is training neural networks to operate self-driving cars. Subsequent models may be rented or sold to external parties in order to mold brainware for knowledge discovery or process automation in diverse domains ranging from science and engineering to healthcare and governance. Humanoid robots. Lifelike machines will take over all manner of dull, dirty and dangerous jobs in the real economy. The applications run the gamut from mining and construction to policing and housework. In these and other ways, the products under the Tesla banner infuse broad swaths of the marketplace. The livened sectors of the economy range from industrial goods and consumer durables to financial services and public utilities. Zesty growth. Given the diversity as well as novelty of the product lines, Tesla has to spend prodigious sums on research and development on a continual basis. Another burden abides in the billions of dollars needed to design and build advanced factories to stamp out edgy goods for mass markets. Despite these and other millstones, the slugger has earned profits in a consistent fashion since the second half of 2019. Not surprisingly, the stock, which sports the ticker symbol of TSLA on the US bourse, has scrambled higher over the same time span in spite of the inevitable chain of fallbacks along the way. The sprightly trends for the firm and its stock should prevail and even strengthen in the foreseeable future. The reasons for the zippy outlook include the rollout of brand new products in the pipeline as well as the buildup of fresh techniques to bolster productivity on the factory floor. Tips and cautions. As with other stocks boasting high growth, TSLA faces an endless series of booms and busts. The volatility should subside in the fullness of time, as the earnings of the company become more predictable. On the other hand, the inpour of profits will continue to surge and swoon as long as the firm maintains its momentum and unleashes one brainwave after another. Given the long-running custom of forging breakthroughs at full throttle, Tesla will not turn into a staid and stodgy firm anytime soon. Roundup. Tesla is a conglomerate of high-tech ventures spanning far-flung sectors of the economy. As a consequence, the stock resembles a diversified growth fund composed of creative startups. Like the massive growth stocks, TSLA has a way of soaring and diving as time goes by. Moreover, the huge swings in price will not vanish anytime soon. On the bright side, Tesla's role as an engine of the global economy looks secure at this stage. On the glum side, though, any type of company may hit the skids for any number of reasons. An example involves a logistics shock such as the disruption of a supply chain in the throes of a global pandemic. Another instance concerns a political flap such as the nationalization of a business by a kleptocratic regime in a banana republic. In these and other ways, Tesla faces a slew of threats at all times. Even so, the vanguard on current trends looks set to deliver an epic performance fit for the annals of technology and business. Given the balance of risk and reward in store, Tesla is a top candidate for consideration by the apt investor who can withstand the volatility in the stock market along with the instability in the world at large. Sources. Disclaimer. This video presents personal views which should not be construed as recommendations to any given person. Each investor has to conduct due diligence and design an agenda tailored to individual conditions ranging from asset diversification to risk tolerance.